Ladies and gentlemen, good afternoon. Welcome to Latvijas Gaze Investor Webinar. Today we are hosted by Sebastian Groeblinghoff, Vice Chairman of the Management Board of Latvijas Gaze. We will start the webinar with the company's presentation, which will be followed by a questions and answers session. You're kindly invited, I would say even encouraged, to participate by typing in your question in the questions box that can be found in the settings panel zone. Mr. Groeblinghoff, I invite you to start the presentation.
Eva, many thanks for the introduction, and good afternoon, everyone, and a warm welcome to this webinar also from my side. Thanks for joining us today at this lovely and sunny afternoon, at least in Riga, and from wherever you are listening, I hope you're also enjoying an early summer. And we today going to present the Latvijas Gaze Group's unaudited first quarter result for 2020. We've prepared the following agenda for you. As always, I will start with giving you a quick update on the key market developments that determined the operating environment for Latvijas Gaze during the reporting period. We'll then have a look at the financials for the first quarter, and I will finally share some thoughts on our outlook and expectations for the remaining months of 2020. And then, as Eva has mentioned, it has become a small tradition. We have also reserved time for questions and answers after the presentation. Allow me one more note to all those of you who are joining us for the first time today. Despite the fact that Latvijas Gaze consolidates the financial results on a group level, the JSC Gaze also publishes its own financial reports. The webinar today will present financial results for the group and separately for the sales and trading business operated by Latvijas Gaze. In case you are interested in more details concerning the financial position, operations, and strategy of the distribution segment, please visit the website of Gaze for more information. Let's then jump into the key market developments in the first quarter 2020. There were essentially two key factors that shaped the operating environment for Latvijas Gaze during the first quarter. It's mild temperatures and it's the spread of the coronavirus that actually led to lower than usual global gas demand during this time of the year. While in Europe, above seasonal average temperatures were the key driver for lower demand, natural gas consumption in Asia mainly dropped due to the significant decrease in economic activity related to the far-reaching corona lockdown measures. As global supplies usually adjust only very slowly on these kind of changes on the demand side, the global availability of natural gas remained high during the first quarter. Subsequently, healthy storage levels and the continued inflow of LNG into Europe as a market of last resort put an end to the price stabilization phase that had started in the second half of 2019 and drove down European hub gas prices during the first quarter. On the regional level, there are two events that are worth mentioning, and it's essentially the opening of the Finnish gas market and the start of the single market zone consisting of Latvia, Estonia, and Finland. The newly established single market zone is the first cross-country market zone in the EU. Despite this major achievement, traders during the first quarter, as expected, still faced several challenges. Particularly the limited technical availability of the Baltic connector pipeline between Estonia and Finland caused congestion for the physical transport of gas quantities. Nevertheless, the new market zone reduces obstacles for the free movement of natural gas in the region and offers new opportunities going forward. Mid of March, the coronavirus also reached Europe and caused governments across the EU to take far-reaching lockdown measures. Subsequently, market players had to adjust their operations and to implement business continuity plans to the best extent possible. Before talking a bit more about the corona situation, let me quickly share a chart showing the price development at the example of the German gas pool frontman's price. As you can see in the chart, European hub gas prices dropped by more than 30% during the first quarter 2020. And it's very much related to the mild temperatures as well as to the spread of the coronavirus in China. We start still with a relatively stable price level in December, started already then to drop in January, because January was milder than usual. And we then got the full effect of the corona measures in Asia pricing in during February and March. And looking at the current price curves, we are even far below this. So June was quoted below 4 euros even in the last couple of days. So price drop in the first quarter already was quite significant, and we've seen a clear downward trend also in the months after the first quarter. So much on the price side. Let me quickly summarize also some key events that have impacted the operations of Latvias Gaze Group during the first quarter. The first key event was the opening of the Finnish natural gas market, as I've mentioned, and the start of the single market zone. And this actually enabled the first natural gas deliveries of Latvias Gaze to customers in Finland. The contracts underlying these deliveries were already signed in the respective year 2019. So that was activities that we completed in the third and fourth quarter of 2019. Then, as I mentioned before, the unusually mild temperatures, particularly during February, led to a significantly lower consumption of natural gas in comparison to a normal year, and it left the sales and trading business with higher than planned natural gas volumes in the Intracans underground storage. And despite slightly colder temperatures in March, the amount of gas kept in storage at the end of the first quarter remained well above the average level of previous years. And this is a phenomenon that was not only applicable to Latvias Gaze, but that affected all traders in the market that had booked storage capacity in the Intracans underground gas storage. At the same time, Latvias Gaze, as well as all the other traders, struggled with a long period of uncertainty around the storage tariffs for the upcoming season 2021. Natural gas traders therefore faced significant difficulties with regard to planning their portfolio strategies and structuring supplies for the next winter season at the most efficient costs. Only on 12 March, the Public Utilities Commission approved the terms and conditions for the 2021 storage season. 2 days later, the Latvian Cabinet of Ministers issued a declaration of emergency situation in Latvia due to the corona pandemic. The following lockdown measures triggered far-reaching consequences for society as well as for the economy. And let us look a bit more deeply into this. First of all, it's safe to say that in contrast to many other businesses and industries, the lockdown measures so far certainly hit the natural gas industry less strongly. As the measures only took effect as of mid of March, natural gas demand in the first quarter remained rather unaffected. Until today, Latvias Gaze fortunately neither had to lay off people nor had to ask for state support to maintain its operations. The group's liquidity position remains robust, and I will elaborate on this a bit later in the presentation. On the operational level, the group immediately after the state of emergency took effect, implemented various measures to protect its employees, customers, and other stakeholders. Amongst others, the group closed its contact centers for visitors, suspended business trips and meetings, implemented a working from home regime where possible, and established extended hygiene rules. At least until the end of the state of emergency, the group's contact centers will remain reachable via phone or electronic means of communication only. Despite this extraordinary situation, Latvias Gaze Group fully ensured business continuity as well as the uninterrupted supply of its customers during the first quarter and beyond. At this point, I'd like to take the opportunity to thank all of the group's employees, customers, and partners for their flexibility and discipline in coping with the new situation. In particular, I would like to mention the outstanding work and contribution of our IT department that enabled remote working for most of our employees within just a couple of days, as well as our legal department that organized in record time the first remote shareholder meeting ever held by Latvias Gaze. Despite the recent improvement of the situation and the first relaxation of the lockdown measures, we clearly expect that the crisis will leave a longer lasting impact also on the natural gas industry. At the end of March, the Bank of Latvia publicly announced that it expects the Latvian GDP to decrease by 6.5% in 2020. Although the group cannot yet exactly quantify the impact of the drop in GDP on natural gas consumption, it is likely that the total natural gas demand in Latvia will be lower than initially expected. Lower total natural gas demand in Latvia as well as in the Baltic region subsequently might result in a decline of the group's sales volumes in 2020. The group furthermore projects that there will be an increase in accounts receivable due to delayed payments by customers, as well as an increase of customers being in default. To manage actively the increased credit and liquidity risks resulting from the current situation, the group has implemented additional risk mitigation and management measures. Let's now have a look at the financials for the reporting period, how the market developments impacted the financials and the sales numbers. I'll start with a quick look at the development of the volume indicators. With regard to volumes, both segments closed the first quarter 2020 on a lower level than at the end of the same period in the previous year. The mild temperatures and the subsequent lower gas demand led to a 27% year-on-year decrease for natural gas transported through the gas distribution network in Latvia. In the sales and trading segment, two main factors drove down sales volumes by 19% year-on-year. On the one hand, a combination of above seasonal temperatures and lower natural gas sales to the power generation segment negatively weighed on natural gas sales in the first quarter. On the other hand, as expected, Latvijas Gaze delivered less gas to larger customers during the first quarter 2020 than in the previous year. These customers themselves had injected significant quantities of natural gas into the storage site in Inšrukāns in 2019 for consumption during the winter period. However, the sales and trading segment still benefited from this change in consumption behavior through respectively higher than initially planned sales volumes during the third quarter of 2019. What effectively happened is that customer behavior simply shifted a part of sales as well as the financial results between 2019 and 2020. Considering the current market situation, it is conceivable that a similar pattern could emanate in 2020 with respectively higher sales in Q3 of this year. It's important also in this context to mention that the first natural gas deliveries to customers in Finland as of 1st January at least partly mitigated the dampening effect on sales of the just mentioned factors. In total, Latvijas Gaze delivered 466 gigawatt hours of natural gas to Finnish customers through the Baltic Connector pipeline. This sales volume comprised 57% of the company's total natural gas sales abroad during the first quarter 2020. So how did the sales numbers then affect the group's net turnover, EBITDA, and net profit? The group's net turnover for the first quarter dropped by 42% in comparison to the same period in 2019. The significantly lower net turnover was mainly attributable to the lower absolute sales prices, as well as a drop in sales in comparison to the first quarter 2019. As distribution tariffs essentially did not change in comparison to 2019, the major driver behind the drop in the group's turnover was the decrease in market and subsequently sales prices, heavily weighing on the sales and trading segment's net turnover. On top of that, the lower total sales volumes in both segments further reduced turnover in comparison to 2019. Despite this huge drop in turnover, the group's EBITDA in a challenging market environment only decreased by 7%, while net profit fell by 11% in comparison to the first quarter 19. Let's have a closer look at the financials for the sales and trading segment operated by Latvijas Gaze. As mentioned, lower sales prices and quantities pushed the sales and trading segment's key financial indicators in Q1 below the previous year's levels. However, although net turnover fell by almost 50%, the segment's EBITDA only dropped by 3%, while net profit decreased by 5% year-on-year. Increasing competition and the ample availability of attractively priced LNG in combination with a drop in demand exerted significant pressure on sales margins during the first quarter. As in 2019, several customers that had closed fixed price contracts in the year before pushed hard to adjust or terminate their contracts in the wake of quickly falling market prices. Despite these challenges, the sales and trading segment managed to deliver a solid financial performance during the first quarter. The ambitious cost savings program successfully implemented in 2019 paid off in this environment and contributed to keep the drop in EBITDA and net profit within limits. Particularly considering the additional challenges related to the Corona crisis, Latvijas Gaze will continue to improve further its cost structures. During the first quarter, the sales and trading segment managed to bring down operating costs by 3% year-on-year. However, it's important to note at this point that depending on the development of the remaining months of the year, higher marketing and debt collection expenses could mitigate these cost savings until the end of the year. Few words also on net profit. Net profit year-on-year dropped more strongly than EBITDA for two reasons. Firstly, financing costs resulting from negative interests for holding cash reserves were higher than during the first quarter 19. And secondly, in comparison to the previous year, depreciation and amortization expenses increased due to the purchase of an office building in the second half of 2019 and the implementation of the first module of a new billing system. So much on the factors and effects that influenced the financial performance of the sales and trading business. Let's now also have a quick look, as always, on the balance sheet. As at the end of the previous reporting periods, Latvijas Gaze, despite the challenging market environment, keeps a strong balance sheet and liquidity position. With regard to key financial ratios, the debt to equity ratio, as well as the current ratio for the group and for Latvijas Gaze, slightly changed in comparison to the last reporting date. The increase in the current ratio mainly results from the lower market prices that reduced the cash needs of the sales and trading business to finance its operations. However, that means, on the other hand, that a recovery of market prices in the future will go together with a higher need and use of working capital. The robust liquidity situation, of course, supports the group in managing the challenges related to the Corona crisis. Nevertheless, the group, on top of the already existing policies and tools, implemented additional measures to manage the increased credit and liquidity risks resulting from the coronavirus crisis. In particular, Latvijas Gaze put in place additional review procedures and credit policies to protect its own financial position, while still supporting customers suffering from the consequences of the current situation where possible. Furthermore, the group will take into account the impact of the virus on macroeconomic forecasts when calculating the expected credit loss for buyers and customers for 2020. To actively monitor and manage the credit and liquidity risks, we continuously improve our internal cash planning tools and instruments. And in that context, it's maybe also important to share that until now, we do see only a limited impact from delayed payments and requests for prolonged payment plans. We explain this mainly with the fact that we made out invoices in April for March, when the crisis really did not unfold to its full extent. And we also saw still quite a high level of payments coming in during May for the April invoice. So at this moment, we do not really see a major drop in the payment moral, although of course a couple of customers, particularly from the vulnerable industries, that is tourism, housing companies, have asked for prolonged payment dates and payment plans. So this is what we wanted to share today on the financials for the first quarter 2020. And let me also quickly share the general outlook for the remaining year. And as always, we have structured this outlook along three topics: market, operating expenses and investments, and financials. On the market, we expect that global and regional demand will drop from previous year's level due to the mild winter and the impact of the coronavirus. First experts' assessments project a drop in global gas demand of up to 5% year-on-year, Could be more, could be less. It's at this moment really difficult to make a sound prediction on this question. At the same time, we see that ample supply of attractively priced LNG in the global market will persist. LNG will also flow into the Baltic region via the Klaipėda terminal and further spur competition on the supply side. Overall, competition within Latvia as well as across borders will increase and further exert pressure on sales margins. And that's what we already see today to an increasing extent. Despite these challenges in the global and regional gas market, we see that the Baltic Connector and the single regional market zone may create new opportunities in the region. Nevertheless, the newly established market regime still needs further development to ensure a fully functioning and transparent regional market. Regardless of the open operational and regulatory questions, Latvijas Gaze will actively exploit the new possibilities and diversify its customer base across the region. Apart from that, we plan to explore additional markets and to analyze opportunities for expanding our business into new segments. With regard to operating expenses and investments, we will continue to follow a disciplined approach as in 2020. As mentioned before, the sales and trading segment managed to reduce its operating expenses during the first quarter by approximately 3% year-on-year, and the group will definitely strive for further cost optimizations where possible. Despite the corona crisis and the current uncertainty around market developments, Latvijas Gaze will continue with its investment program for 2020 as initially planned. The 2020 investment program is well on track and clearly focuses on further improvements in the efficiency and effectiveness of customer care processes and strengthening of the company's core business. In that context, the single biggest investment item in 2020 remains the implementation of the new billing system and customer portal for household customers. Let me finally share an update of our guidance on the planned financial results for the group in 2020. We expect that the impact of the corona crisis, as well as the lower demand due to above seasonal average temperatures, will negatively weigh on the planned group's results for 2020. Despite the mentioned additional risk mitigation management measures, Latvijas Gaze Group particularly projects higher credit losses and provisions for bad debt due to the coronavirus situation. Considering the huge current uncertainties in global commodity markets, additional downsides, but potentially also upsides exist with regard to the financial performance of 2020. In our initial outlook for 2020, that we shared during the last webinar, we indicated that we expect the full year result for 2020 to be slightly below the group's 2019 result. Currently, we see the full year result to be more significantly lower than in 2019. However, the profit generated during the first quarter provides the group with a certain financial buffer for the remaining year. Overall, we still expect a positive full year result for the group. However, due to the considerable uncertainties in the market, we definitely do not preclude that we will have to review our assessment on the expected financial results during the year. Before I close the presentation part, I would like to draw your attention to our financial calendar as well. So the next upcoming event that is on our schedule is the annual shareholders meeting that we plan to host remotely on the 25th of June. And the agenda of the meeting will comprise the following topics. We have reports of the board, the council, and the audit committee, and the certified auditor's opinion. We will ask for approval of the annual report 2019. The shareholders meeting will decide on the distribution of the profits for 2019. And we will have as an agenda point setting of remuneration to the members of the council and the audit committee for the 2019 annual performance. And we need to elect an auditor for the 2020 annual accounts. For further information on the shareholders meeting, as well as the relevant documents, please visit the Latvijas Gaze or the Nasdaq Baltic website, where you can find this information. Now, before we move to the question and answer part, there's one personal note from my side. As you may have already read, I will leave Latvijas Gaze as of 30th June and take a new position in the energy industry outside of Latvia. And this effectively means that today's webinar is my last webinar as CFO of Latvijas Gaze. And therefore, I would like to thank Nasdaq Baltic and in particular Eva Unda for the continued and very professional support in organizing the webinars in the last months and years. And of course, I also would like to extend a big thank to my team and all those within Latvijas Gaze who contributed to the preparation of the webinars in the last years. And finally, I would like to thank you as investors, shareholders, analysts, and individuals following the development of our company for your ongoing interest and trust in our organization. And I'm now more than happy to take any open questions that you might have.
Thank you. Thank you for the presentation. Before I'm starting with the first question that we have received, a reminder to those participants who yet haven't submitted their questions, you can do it anytime in the questions box that you can find in the settings panel zone. The first question that we have received is about the change in the management. So in particular, how will the change of the vice chairman of the management board affect further management of the company when it is planned that the new member will join?
So that's a fairly good question. I'm not even sure if I'm the right person who can really answer that question. But in the first place, of course, I hope that the fact that I'm leaving the company will not affect the further management of the company. And of course, the council of the company has started a search for a successor. So this is already ongoing. It's too early actually to give a clear indication when the successor would join the company. Of course, there is the ambition to get a person as fast and as soon as practically possible. But I would be skeptical that we really have someone in place on the 1st of July. But let's see how the process will run. So that's actually the current state of affairs. And I personally usually see also changes in management boards as something that is a big opportunity, again, to get additional impetus from the outside. I think Latvijas Gaze has been doing quite well in the last years to manage the unbundling phase and to position itself in the open market. And getting now new perspectives from the outside can be very beneficial and create new opportunities.
Thank you. We also have received 2 questions online. What are the precautions Latvijas Gaze is taking to prepare for a potential wave number 2 of coronavirus and its impact on company's business?
Fair question. We will, of course, keep in place the measures that we have taken already during the first wave, and we have made our learning experience as well. So, as I mentioned, we have put most of our employees in a home office regime, and we will further improve our capabilities to do that on relatively short notice. So, in case we should see a second wave that again requires far-reaching lockdown measures, we will again take and implement the measures as we have already done during the first phase. So that's more on the operational side. We are working on increasing our capacities also to take in more mails, more phone calls in these case of situations. So to really be able also to serve customers on a remote basis. And on the business side, we are very closely monitoring what is happening in the market. And as I mentioned, it's too early to really make any sound judgment on how the economic impact, how deep it will really be and what it will mean for our business. As I mentioned, we expect that there will be a drop in demand. And it's something that we clearly have to deal with and where we have to find ways to accommodate this. And the challenge probably is that we have seen a relatively mild year anyway, that competition in the market is increasing. And the logical step in tackling these kind of challenges is that you continue to look at your operating costs, that you try to get more efficient, that you really improve your structures and to be as competitive as possible. On the other hand, as I mentioned, we have deliberately not scaled down our investments because we clearly see that the investments we are making at the moment will exactly help us to achieve this, to become more efficient, to become more effective, to increase our capabilities to serve customers digitally and remotely. And all this actually would help us also in a situation of a second wave of the corona crisis or the coronavirus.
Thank you. And the second question that we have received online, what exactly are the risk mitigation measures that are implemented to tackle the potential decrease in sales?
Well, I mean, we have not really, and then maybe I didn't express that clear enough. I mean, we can't really take major mitigation measures in terms of a drop in sales. It's all the measures that I've just mentioned from a probably more global perspective. The risk mitigation measures that we have taken are really more now on the side of ensuring our liquidity and increasing credit controls to make sure that we do not run into a situation where we have too many customers defaulting and putting a burden on the company and on the profitability of Latvijas Gaze. This is a very challenging topic because we have an interest, of course, in keeping our customer base, and we know that there is a number of industries that have been hit quite dramatically by the lockdown measures, and we have simply internally developed certain schemes how to rate and how to assess the credit risks going forward and how we can still keep those customers also on a longer term basis and how we can help them in the current situation. And it's a balancing act because on the one hand, we want to help those customers that are suffering the most from the coronavirus consequences. But at the same time, we need to ensure our robustness, our own financial position. And I mean, there are different tools you can implement. You can ask for additional securities. You can really check the general health of companies more deeply. I mean, we do that during our normal credit check procedures anyway, but we are now looking into additional indicators to be able to really judge if we can afford to continue delivering gas to these customers, or if we unfortunately have to let them go. And that's not easy. And we have increased also the frequency of our reporting to really have a full picture at any time on where we are standing with regard to delayed payments, defaults, to really be able to manage this and to find answers as quickly as possible.
Thank you. And the third question that we have received online, is Latvijas Gāze going to open subsidiaries in other countries in Baltic Sea region?
It's a very good question, of course, particularly against the background that we now see this single market zone and the activities that have unfolded in the last couple of weeks and months. Latvijas Gaze permanently monitors the situation and looks into the individual markets. At the moment, we don't have any concrete information that we could share or where we could really say we have already decided on opening a representative office or even a subsidiary in one of the neighboring countries. At this moment in time, we serve the full region from Latvia, and we are supplying gas to Estonia, Finland, and Lithuanian customers as well. It's something that we will put onto our agenda for reconsideration on a frequent and on a more regular basis, but at this moment, there is no concrete plans to open an office.
Thank you. All questions are answered. We have recorded the webinar, and the recording will soon be available in Nasdaq Baltic YouTube channel and also in company's announcements. Mr. Groeblinghoff, thank you for the hosted webinar, and thank you for starting the practice of webinars for Latvijas Gaze. It was a pleasure to work with you. Participants, thank you for joining.
Many thanks, Eva. Pleasure was on my side, and I wish all of you the best going forward. And usually, paths in life always cross twice. So I hope to hear and see many of the colleagues that have now also followed this webinar in the future as well. Take care, stay healthy, and all the best for you. Bye bye.
Bye bye.